This is Bob Anderson, and I want to do another video where I discuss testing trade strategies. If you guys remember, I did a continuation trade on the 1 minute chart back testing, and I gave the results, and we talked about how I had adjusted my strategy for the time period to go for 20 tick target, which is 5 points, with a 10 tick stop, which is 2.5 points. And I don't specifically remember, but it was like 67, 68% win rate. And that was between 9:45 and 10:30 in the morning. So, what I decided to do was to try to do the same thing with the 5 minute gold line. Okay. But I wanted to simplify things because, when I trade the 5 minute gold line trade myself, I do it very manually, and I have a lot of break evens, because I'm looking for a reaction at the gold line, and there's always one there, and then I'm getting in and I'm putting my stop below the pivot. Let's just say we're looking at a long. I'm putting my stop below the pivot, and I'm seeing the reaction going up, and then I'm grabbing my stop and putting it at even. And to be honest with you, a lot of times I get knocked out at even if the trade goes on and works. So what I did is I said, well, why don't I try to simplify this? And do the continuation trade off the 5 minute chart, using pretty much the same concept, if not the same concept. Again, looking for space between price of the candles, looking for pullbacks that are straight, looking for a touch of the gold line, looking for a top, and then looking for a break at the top. Literally the same strategy. I'll show you an example here in a minute. And I thought to myself, why don't I go back and do some evaluation on that? Well, Matt, who had done the back testing on the continuation trade from October 24th to November 4th, he said, hey, well, why don't I run the data on it? Since I've already got the data, why don't I do it? And you kind of review the results, and we'll go from there. So we did that. And to be honest with you, the results weren't great. We made money, but it gave a basis from which to then work off of. So that's where this comes in. Okay. Now, again, I took just a sampling of results from what the back testing was really covering. Okay. So this isn't all of it, but this is to give you an idea. This is to give you something to think about. And this is really for me to emphasize one thing that I really want to emphasize at the end of this, okay? At the end of this, before I show you examples, okay? And so what I did is we went back from October 24th through November 4th, and we removed FOMC day, okay? Again, so we already had that data. We set up a 5 minute chart, and we basically did the continuation trade, which is in the break of the candle, the top of the candle. And we used different, and we started at 9:45 Eastern Standard Time. Again, pre-market, I really don't see this working. There's just not enough follow through. So I didn't want to waste my time on that. There are exceptions to the rule, but in general, I want to be when the market's running. Okay. So what we did is we ran it from 9:45 to various times. We ran it to 10:30, as a matter of fact, and we found that we weren't getting any trades. And I started thinking, I shouldn't say getting any trades. We just weren't getting a sufficient number of trades to really be like, well. And what I started thinking about it, I'm going, well, hell, that's because if you think about it, from 9:45 to say 10:15, that's when the market, that's why I always wait till 9:45. That's when the market starts making a direction. Well, that 5-minute gold line is always lagging. It's the thing that's catching up. So by the time price ever comes back to it, I mean, it's normally like past 10 o'clock on a day that the market's moving. So anyways, here's a perfect example. If we stop trading at 11 a.m. on those 8 trading days, we took 9 trades. If we stopped even at 10:50 a.m., 10 minutes before, you only took 6. So a third of trades were gone. Meaning it took even till after 10:50 to get 33% more trades. Well, actually to get 50% more trades than this. To get 50% more trades 10 minutes later than this. And that's, again, if you think about the 5-minute gold line. The market finally picks a direction. It's 9:45. It finally picks a direction and off it goes. And then it's, lollygagging around and doing its thing and bouncing off the gold lines and all that kind of stuff and whatnot. May even rotate below your red line on the 1-minute chart and then back over your red line again in the same direction, blah, 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 before it ever comes down to your 5-minute gold line. Because your 5-minute gold line's it's the tortoise. It's the tortoise just walking along. This is the rabbit and the fox. And the tortoise is just kind of going along. He's going to catch up later. So anyways, so we just eliminated worrying about 10:30, and we focused on 11 and beyond as our trade times in this study. Okay, so what I want to show you is that I want to show you the highest success rate, by the way, was 5 out of 6 wins if we stopped at 10:50, which is pretty good. I'm gonna explain what all this is here in a minute, okay? But I'm going to talk about the most profitable results first. And then I'm going to give you then I'm going to tell you the lesson that I really want you to get after, okay? The most profitable results in our study was trading ending at 11, okay? We used a 24-tick target. There's a reason I use a 24-tick target. Usually when you're playing off those, I've told you guys this before, when you're playing off that gold line on the 5-minute chart, those are normally bigger moves in general than playing off the 1-minute chart. So, and the difference between a 12-tick stop and a 10-tick stop was pretty significant. So what I decided to do was go with a 24, which is a 6-point target, 6 points, with a 12-tick stop, which is 3 points. So 2 to 1. If you started at 9:45 and you ended at 11 and you did the continuation trade off the 5-minute chart alone, following the rules, you had a 71% win rate. One contract on those 8 days for $1,764. Now, let me just point this out to you when people ask me, well, what'd you make today? What'd you do this? What'd you do that? $1,764 divided by 8 is only $220 a day. I'll show you guys the trade I took on Friday. I took 2 trades on Friday, both of them won, and I shut the system down. I was done at, 10? I mean, there's just no sense in pressing it. I mean, it adds up fast as long as you pick the right trades, pick the right times, and make your money and get out. It adds up fast. Because I made $350 or something like that on Friday. Well, I mean, 9 days or in 8 days, that's over $2,000, whatever it is. I don't know. Just on one contract. Anyways, but if you do a 10 tick stop with a 24 tick, you lost another one. $1,389 was your loss. I mean, was your win. Still pretty good. $1,389. All right. If you carried your trades out to 12 p.m., which is noon, so you add another hour past 11. Again, 24 tick target, 12 tick stop, 16 trades. So you picked up 7 more trades. Your win rate dropped down to 56%, and your profit dropped to 1586. So look at that. Okay? Here's what you need to focus on. This and this right here, because those are the same exact strategy. Same exact stop, same exact target. If you stopped at 11, you made 7 less trades, but you made more money. The longer you went during the day, the more you gave up your money. Is anybody picking up on the lesson I'm trying to give right now? Is anybody trying to pick up on the lesson I'm trying to give? I'm hoping so. All right. So let's just say for shits and giggles, we ran it all the way out to 4. We went all the way till the market closed. Now you got 40 trades on that same strategy, 24, 12. By the way, 0 means no trailing stop. You just leave it. You enter, you don't touch it. That's what 0 means. Meaning you don't do a trailing stop. You don't have a break even. It either wins or it doesn't. Okay? 4 p.m. 40 trades, 43% win rate, $1,490. Again, focus on that. Okay? So what happens? You continue to work another 5 hours and you've lost $300 more. But you had 40 trades. Woohoo! So let's talk about this one right here where you stopped 10 minutes earlier, just 10 minutes earlier than this one here. You had 6 trades, 83% win rate, but you made $1,300. The lesson I want you to get out of this, besides the fact that this is a winning strategy, just your basic continuation trade that you're doing now on the 1 minute chart, you do it on the 5 minute, and it actually is easier to execute on the 5 minute because the damn thing doesn't move as fast. It's easier to see. So for those of you that want it to be, those of you that are like, man, that 1 minute trade is just, it's too hectic for me or whatever. This is the much easier version, okay? And to be honest with you, that $1,764 up there off of 9 trades is probably more profitable. Well, no, we had $1,800 was what I had on my continuation trade. But a little bit longer trading because that's till 11. You don't want to end at 10:30 because you want the gold line to come into play, which the 5 minute gold line comes into play after the 1 minute gold line has been playing. Okay? That's why I stopped the continuation trade from 9:45 to 10:30. I stop it at 10:30. I had to find where's the sweet spot on this. Well, it turns out it's around 11. I mean, could there have been something between here and here that's a little better? Well, maybe. I don't know. Starting to split bananas there. But anyways, So my lesson is trade time is important. Understanding when your strategy that you're trying to do is the most efficient. Be honest with you, you probably don't even have to worry about this damn thing from 9:45 to at least 10:15. Probably there wasn't even any trades all the way to then, now I think about it. But anyways, that right here is a very successful trading strategy. 71% win rate, $1,764 on one contract by playing the break of the candle on the 5-minute gold line. Continuation trade, just like the 1-minute continuation trade. Okay? So, I was reluctant to do this video today because next week is Thanksgiving. Don't do this trade the week of Thanksgiving. Okay? Please don't. Because I don't want the email, it didn't work. I don't expect this stuff to work next week. I don't expect the follow through and the push and all that kind of stuff next week, the week of Thanksgiving, like you got towards the end of October, early November. I don't expect that. What I do want you to do is write down some notes on this, go back and look at some charts yourself, familiarize yourself with this, and maybe pick this up as a strategy that's a little bit easier to do. I shouldn't say a little bit. It's a lot easier to do than the 1-minute continuation trade. I know I'm gonna. As a matter of fact, I've done it. Since we've done this, I've done that trade. It's a beautiful trade. I have actually done this trade. I find it easier to do than when I played it off the gold line. It really is. I mean, it's just easier to do. But what I find interesting is this, and this. So just visualize if you didn't even start looking for this trade until here, or start looking for this trade until after here. You'd end up having a loss. Okay? It's so, again, not all these strategies, but these things I talk about, a lot of times they're really dependent upon the time of the day that it's happening, unless you can recognize things that are abnormalities from the time that I do talk about. And I'm going to show you an example of that right now too. So Friday, I had an abnormality that happened before my trading time zone. Okay. You know, my 9:45 to 10:30. I had big business meetings on Friday. So I came into my office early, drank some coffee, and I had my charts just happened to be sitting in front of me. And I was preparing for my meetings, and I looked over and I went, oh shit. And I immediately grabbed my market chart, my news chart to see if we had news. I was trying to figure out what the heck just happened. And it turns out we didn't have any news. Instead, the market was just going for some reason. And I looked over and I said, oh shit, this is a setup. And it was only, what time was it? It was 8:14 in the morning. I mean, even when I trade my pre-market stuff, I don't look at it until at least 8:30. But when you see an abnormality on the chart and you go and you know, whatever, and it's just like, this is it, okay? It's not just, did it cross, did it do this, did it do that? No, it's there. Then you can jump on it, and that's what I did. And so, I mean, at 8:14, I entered along in the ES on the 1-minute gold line, and it took a while. It took till 8:20. So 6 minutes, never took a tick of heat, or maybe 1 or 2 ticks, maybe. And I got 5 points. But it was an abnormality that just laid out right in front of me while I was getting ready for a meeting, while I was sitting here working on stuff for work. And so can you find abnormalities between here and here where the 5-minute gold line continuation trade would work? Well, probably. But if you're just trying to go off the rule, is there space? Did it come back? Is it a break of the candle? Yes, yes, yes. And then it just kind of peters up and then rolls over and takes you out. Don't blame me, because I told you right here, you don't want to be doing that trade after 11. Okay? It's understand your strategy, understand what you're trying to do, and then make sure you're trading at the right time. That's really the lesson here. Don't trade this next week. This takes a lot of action to work. I don't expect a lot of action next week at Thanksgiving. Matter of fact, I'm pretty confident the only thing I'll be trading all week next week, if I trade at all, probably just Monday, Tuesday, will be oil. It'll probably just be oil. Because, and I get a lot of messages from people. Holy cow, Bob, you're right about oil. By the way, I'm working on some back testing for that too, to do this same video. Let me show you what I saw on Friday on the 1 minute. Then I'm going to show you just a simple example of a continuation trade that I'm talking about on the 5-minute chart for the ES. And then I'm done. All right. I know this was long, but I try to get important things into this, not just this. I want you to understand certain things. These trades just can't be taken willy-nilly at any time. There have to be certain times of the market when the players are pushing. All right? Anyway, so let's get this darn thing straightened out here. All right, so here is my 1 minute ES chart. So I came into my office at 8 o'clock in the morning. I really did. And so what did I do? I happened to look and I said, gee, we're in an uptrend. You know what I mean? We're in an uptrend for the day so far. You know, here's your overnight open. We blew through it at 4 o'clock in the morning, and it just and we've stayed above the 5-minute red line, been bouncing off the 5-minute gold line, yada, yada, yada. Okay, and I just happen to, whatever, and I'm just sitting here, getting ready. I'm writing notes for my meeting and stuff, and then all of a sudden, wham, this ran up. And I was like, wow, look at that. And then it came back. Now, it didn't come back in straight lines. It did not. So it didn't go with all my rules. It didn't. But it's just the hugeness at the morning that it blew up 10 points. And it pulled back not only into the gold line, but it pulled back into my green line, which I don't talk about much, or I don't talk about at all in here. And I said, Bob, let's just throw a contract on this. So I took the break of it at 39.8750. Bam, 39.9250. So my point is, that was an abnormality of time, but I was looking at an abnormality of price action. And that's why I took that trade. And then I said, well, shoot, now I'm not really worried about anything. And I pulled up the oil chart and I took a trade, I don't know, I think it was 10.10 or something. Made $100 or so, and boom, I was done. I just shut my chart down and went to my meeting. So let's talk about the continuation trade let's just talk about the continuation trade on the 5-minute ES. Again, this is a simpler in my opinion, this is an easier version of the continuation trade because it moves a little slower. It's not as hectic. But here's an example. Again, wrong time. I get that. But I'm opening up my chart to the last one I saw. This is literally the last continuation trade I saw. So we crossed up, breaking a pivot. See, there's no pivots to the left. Here's your pivot right here. We broke the pivot, same concept as the 1 minute. We rolled back into the gold line. You would have had your entry right here at 39.6550, and so your target would have been 39.71.50, because remember it's 6 points. So where's that? 71.50. 71.50. Well, isn't that interesting? It ran right to that number. Now it opened up here on this candle here, so you got filled before this even pulled back. Okay, but you got that all happened in 4 minutes, 4 or 5 minutes, four to 5 minutes. Boom. That's an example right there. Now this is at the wrong time. This is 3 o'clock in the afternoon, but this stuff sets up all the time. Here's one. Roll down, pull back into your gold line. Boom. There's your break right there. 39.68.75. So that would be 62.75 would be your target. Where is that? 62.75. Right here. Right here. Same candle. So that all happened within that 5 minutes. All happened in the same candle. So it broke. Boom. There's your target. Okay? I don't want to belabor the continuation trade too much because I think I've beaten that thing ad nauseum. But anyways, I had one losing day last week. I lost $220 on Thursday, and I just shut it down. I didn't feel like it. I didn't see things happening the way I wanted it. I lost $220. I think I made. I have 2 accounts that I'm running right now. One is an eval account for a company that I have not talked about yet. Somebody noticed it though. And I've had the account for a week and I'm up $21.60, I think it is. It's a $3,000 account. So I don't know if the week of Thanksgiving I can knock it out or not. I don't know. And then I have my other account that I think I made, I don't know, $1,000 or something. I have a target because there's only so much money you can take out, so there's no sense in playing them. The eval accounts you got to work them through, but funded accounts and that kind of stuff, they're why risk the account when you're putting the money at risk that you're trying to get over certain time periods. Anyways, that's my video. Very long. I'm sorry that it's very long, but I want people to learn this. Because if you too could do something that's a 70% win rate and make $1,764 a contract when the market's in movement, as simple as the 2 trades I just showed you, why not? Okay, by the way, that second one was in the exact strike zone. It was the first gold line trade, and it actually hit at 10:05. 10:05 on Friday. So, anyways, I'll talk to you guys later. Have a good day. Bye.